one theme, if one looks back at 2018, I think is the fact that we must view ourselves as global citizens. We happen to live in South Africa. That doesn't mean all our investments need to be in South Africa, but what we've also seen is the fact that our markets is moving in line with the rest of the world. If there's a hiccup in America or in the UK, we feel that. We're back to economic factors. But that means that if a South African investor looks at his portfolio, you must review your international exposure. You must make sure that it is at the level you want it to be. And elements you need to take into consideration is not only the level of the rand, because investing is a 5, 10, 20-year decision. It is to what extent you will need capital in hard currency. Perhaps your children or grandchildren aim to immigrate or to one day live overseas. That means you need to up the international exposure. But that is part of a long-term strategy. It's not a knee-jerk reaction. And luckily, I think we're back in the realm where those things are rational decisions and not emotional decisions. So I think you need to look at your portfolio, speak to your advisor, and decide what the optimal level of international exposure is. And be careful. International markets also go up and down. International markets also has problems, just like the South African market. So it's a matter of diversification. Diversification remains the only free lunch in the investment world. But that's a world market. South African market, there's also some interesting dynamics that we are starting to see emerging.
Absolutely, Theo. I think for the first time in quite a few years, we're looking at the JSE and we're not worried about, very overvalued companies where there are no prospects for growth and no real rewards for shareholders, bar maybe inflation or something. Now we're looking at the JSE and saying to ourselves, gee, there are quite a few sectors here, especially companies that operate in South Africa for South Africans, for the South African market, that are offering really good value. Companies that are paying very nice dividend yields, even in this depressed economic environment, paying great long-term growth prospects as well. And suddenly we're starting to say to ourselves, there's a big shift in the dynamic in this market. And it's not just about the big rand hedges that are going to reward you evermore. I think for once, actually, those rand hedges might not be the play for a South African investor. It might actually be the South African investors or investment companies only. And to give you some ideas, if we look at the listed property sector on the JSE, it had a terrible year in 2018. But that's not to say that the companies that are still operating here that are high quality aren't offering great value for investors. Obviously, there's some tax considerations around those businesses, but they're offering very good value. And if we look at the financial sector in South Africa, one thing about our country, we have great banks, great insurance companies that know how to operate in a difficult environment and are well poised for growth. Any kind of economic uptick in the country would work well for those businesses, because frankly, I think there's no good news priced into the value of the real South African companies. There's just bad news. I mean, we all know the bad news. And so if there's any kind of economic surprise, that's going to work incredibly well. And I think lastly, a really interesting trend. We've seen probably 5 to 7 years of quite poor performance from value fund managers, unit trusts that are managed by fund managers. And I think what's interesting about that is that dynamic has also shifted. All of a sudden, those companies that are owned by value fund managers are in a position to reward investors for their patience. So if you own a value fund and you've been getting impatient and you've been worried about selling out of that fund, now is probably not the time.
2018 was a challenging year, but we're in a much, much better position than 12 months ago. And I think we should appreciate that. There's again a bit of optimism coming in. There's a new government in play, and we can look forward yet again to probably returning back to normal long-term yields and growth that one would assume one would get from asset classes.
So from Theo and myself and all of us in the group, we want to wish you a very happy festive season and all the best for a wonderful 2019.